Hey, welcome investors to the 40 Finance channel. It's been a while since I've talked about ARK funds, so I'm going to do a little 2021 late in the year ARK fund review for ARKK. This is an ETF that I own in my SEP IRA, and I've been a fan of ARKs for 3 or 4 years now. I started my investing journey with them in the ARK Web Fund, which is ARKKW. And when I got out of ETF investing in my brokerage account and I switched to all single stock investing, I did sell my ARKW for a handsome profit at the time. But when I transitioned ETFs into my retirement account, I decided to go with ARKK. One of the reasons I decided on ARKK is simply because I did not want an entire basket of ARK funds. Frankly, they perform about the same, and the stock of the day in Kathy's world can change at any moment. So if you go with ARKK, you're basically just saying, you know, give me the best picks that you've got across multiple industries. Now, interestingly enough, for ARK, despite all the hype you see across YouTube, this one is down from its year-to-date high, which is in the neighborhood of 150, I believe, back in February. But we have seen growth stocks start to shrink a little bit in terms of how much of a multiple investors would pay for them. So you might even see some rumors like, hey, is ARK still a good fund? Maybe I'm losing money because I started in January and now it's negative and it's not going anywhere. At least as far as I'm concerned, ARK remains a great long-term investment within a reasonable percentage of your portfolio. In the SEP IRA that I mentioned earlier, ARK represents about 20% of that portfolio. And the way I look at it, when we get into the holdings and whatnot, there's a lot of stocks that Kathy Wood and her team like that I would never buy in a million years. And so for me, being, I would say, mildly risk averse, ARK gives me an opportunity to let somebody else take the risk. Granted, it's with my money, but I think she has a proven track record, and I'm happy to trust her with 20% of my retirement portfolio, with the goal of finding the highest growth opportunities and understanding that there's going to be periods of pullback when the investment might go down. That's just the nature of high growth stocks. So assuming that you want some high growth risk in your portfolio at a reasonable cost with somebody with a good track record, that's where I think ARK funds can really shine. Where they can go bad, in my opinion, is if it over-indexes in your portfolio, just like any other stock, right? If you had all Tesla, you're certainly not diversified and you're at a much higher risk for things to go down. But if you add it in as a percentage play, it makes a lot of sense when you start talking about 3, 5, 10-year timelines where growth stocks are going to have ebbs and flows, but you continue to invest. And eventually, over time, like all good things in the market, I think you'll see better than average returns. All right, let's take a look at the technicals first. Now, I'm not an ETF day trader. ARK has enough volume that you could probably pull it off with this stock. But the real purpose of this chart is just showing you where it's been. The high, it looks like, was 156. And where we've went from there, which is where you start to hear about people maybe saying rumors that, you know, ARK fund is done, it's dried up, all the returns are out. But it has, you know, come up from the low, which was May 13th at $99. And that coincidentally was a market low point as well. So it's bounced back since, and you're kind of riding this 120 line, which, by the way, is still under the 200-day moving average. But let's just look at this chart from a 5-year perspective for a second. Even with this dip, right, which got down to 104, and even if you wanted to take out the pandemic, all right, so let's start here. somewhere around 127 of 2020. You can still see your performance way back in 2016. The ETF opened at 21. Pre-pandemic, you got up to $60. And I would say very roughly that Kathy's conviction on growth stocks and whatnot wasn't even fully established in 2016. I think you started to see some of that with Bitcoin in 2018. And if you want to compare it, let's see if I can throw the S&P 500 in here. Just make it, let's see, we'll make S&P 500 a red line. And right here. So you go back, it looks like this actually starts in 2017, my apologies. The red line is your S&P, blue line is your ARK. So track record wise, it wasn't just a pandemic thing. Okay, she's been rocking it pretty well above the S&P for some time. Now we had explosion, right, in the pandemic. And there's a lot of opinions on maybe why that happened. The multiples of the market went up. Obviously, growth stocks got a new spotlight on them, and you had significant returns from there. But regardless of that, you know, these aren't the type of returns anybody gets every single year. If you're doing this pre-pandemic, you know, S&P going up as you would project, but ARK's, your investment in ARK beating the S&P fairly handily, that's exactly why I have a portion of this in my retirement portfolio. All right, so what do you need to know about ARK? Well, there's two big things that if you're new to the fund that you should probably recognize right off the bat. The first is the expense ratio of 0.75%. You will get a lot of chirping about this expense ratio because it is higher than, I would say, the majority of ETFs out there. And the rationale behind the higher expense ratio is that this is an active ETF, right? So when you think about total stock market index, all those low-cost ETFs, they're just indexes. They just take what the market does and replicate it on a percentage basis, right? And what actively managed translates into is that they buy and sell whatever stocks they want at whatever time with the only goal of producing the best returns. Now, it is a thematic ETF in the sense that, you know, it focuses on high growth and maximum ROI. So they try to stay in that lane, right? They're probably not going to buy a Pfizer or a Home Depot or something like that. But you should know that you cannot necessarily predict what ARK will buy or sell at any given time. And you have to be comfortable with the fact that you're basically assigning a portion of your investment over to someone to invest for you. Now, the other thing that goes unnoticed with ARK funds is that they do typically have an annual dividend payout. I'm not sure that they post it anywhere, but right around December, they typically send out a dividend for the year. And I brought this up on Seeking Alpha. It looks like maybe 2017, they did about $2. 2018, just over $1. And then heading into last year, let's see, 2021, at the end of the year of 2020, they did pay out a little bit over $1. I would expect that ARK would continue to sort of send out this end of the year bonus check that they have, and I received it in ARKW as well. I did not look up what the plans are for the future or how it works. I'm just telling you that in my personal experience, sometime in December, ARK sends their own version of a Christmas gift. All right, so what does the expense ratio mean and what exactly does it cost you? This chart is helpful. This is an agnostic chart on Investopedia. It has nothing to do with ARK specifically, but it shows you on a $10,000 investment what the different expense ratios cost. And I see my camera's in the way there, but these over here are 2% and 2.5%. So in year one of your $10,000 investment, assuming it gained 10% and got to $11,000. The average ETF, which is 0.5%, I would say that's about average in today's market, you would pay $55 on the $1,000 gain. Then you get into ARK, which will bleed closer to 1%, and it costs you $110. Now we fast forward to, let's say, the 10th year. And again, this is assuming a 10% growth of the asset itself. You'd be up to about $26,000, and you would spend $130 in that year for a 0.5% expense ratio. The ARK at closer to 1% would cost you around $259 a year. So I'm just going to share my personal opinion with you on expense ratio. You obviously have your choice of Vanguard funds, things like that have much lower expense ratios. Certainly than ARK's at 0.75 or 0.79, whatever it stands at today. The question though to ask yourself is, what level of return do you expect out of each investment? So if I offered a low-cost ETF at 0.01%, right, and it hardly cost you anything for it, and you compare it to ARK and they're 79x above that, the question then becomes, can ARK outperform my ETF, my low-cost one? Can it outperform it by that much to constitute the price? And at least in my short time with ARK, 3-4 years, something like that, it has covered, and you can go back in history and compare it against the S&P 500, and you can see that the expense fee has been well worth it. The question really comes down to your level of trust. Would you pay someone more if you believe that they can make you more money than the other ETF? That's just an independent opinion. I would, and I trust the level that Mark's been operating on up to this point. All right, quick look here at ARK holdings as of August 27th. And the reason I'm doing this is because it basically summarizes why I forced myself to buy this fund, because they invest in a lot of things that I normally would not. And that is good, particularly in my retirement portfolio. I don't mind having so-called contrarian picks over there. Now, I have a lot of my favorites over there, but there are contrarian picks like this where I say, Kathy and team, you guys pick your best ones and I'll roll with you. And Tesla has obviously outperformed significantly. It's now the #1 holding. But what is nice about ARK is this fund tends to be capped, I believe, at 10%. Maybe it's 12% because I see they're 10.53. But they keep that Tesla capped at 10%. So it never grows all the way to like 90% of the portfolio. I would not like that. So for me, it's good that it stays at this level. Looking down the list, Teladoc, interesting company. I don't necessarily think that Teladoc has a moat that's worth talking about. However, they're coming in at #2 on the holdings. So again, actively managed. I trust my manager. We'll roll with it. Roku. I see Roku as overpriced with a limited mode as well. And I love Roku. We have 4 TVs in our house that are the TCL Roku TVs. But I wouldn't buy it as a standalone stock, not for myself. Coinbase, I like that holding because it gets back to that Bitcoin exposure that frankly I don't have outside of the investing world. So getting into Coinbase, I'm okay with that. Unity Software, this is a stock that I used to own and sold when it dropped too far, and I would probably buy it again if I saw the price come back down. Zoom, Shopify, Square, I own Square. I would not buy Shopify at its current price, but I'm okay that ARK owns it, right? All right, so the purpose of going through those holdings is not necessarily to criticize or to think outside the box on them. It's a list that, hey, this is what this fund is investing in, right? So if you're not on board with this list of names, then it's probably not the right fund for you. Now, for me, I'm not necessarily on board with some of those names either. However, ARK has the track record and the performance, at least after the past few years, that I say, I trust you. I don't want to go all in, but I'm more than happy to put 20% of my retirement fund in this particular investment because it takes risks or it buys things that I normally wouldn't. And we always have to be careful of ourselves, right? I have plenty of ETFs like the QQQ, which I'm a huge fan of. I have the QQQ, 30-some% in my SEP IRA, so that's my pick. But I also want somebody else to make some picks for me, and that's why I invested in here. All right, investors, so that's a little overview and opinion on ARKK for 2021. Let me know what you think about this one in the comments. As always, please give me a like, subscribe to the channel. We'll see you on the next video.